I was just opening up your email. Pretty good timing. But I know you like to tell me yourself. So what do you think? How are we doing? Should I open this first?
I can just tell you if you'd like.
It's like a present.
Okay.
This one has visual aids, though. Yeah, let's see. No, so lay it on me. What do we got?
The headline is it's still a strong seller's market, despite interest rates continuing to be in the high sixes. It's just been there bouncing around between 6 and 7 for many months now. So that's about as predictable as it gets nowadays, right? So people have wrapped their heads around that. And what you see in terms of homes sold is we're up month over month, over 2,400 homes that were sold in June. And that is up 8% month over month. Still down year over year. You know, if you look at last year, we're down about 400 homes, which is about 14%. But you know, the trend looks pretty normal as you look at January up through June, as we get into the spring and summer season of selling.
Yeah, that sounds about right. That's just total volume, right?
Right.
Okay.
I guess what's interesting about that is you can see that June of last year was our peak month.
Yeah.
From there, it kind of hovered, right? Just a little bit lower than that before getting into fall. So interesting to see what happens this year if we continue to go up or.
Yeah, that's when rates just kicked in. You remember that.
Right.
We knew it was coming. It started coming, and then all of a sudden it was 5 and 6%. I think around that time. We're pretty close.
Yep.
And everyone was in a hurry. Okay, so the donut looks different this time. Usually that thing looks the same.
Yeah, that's a great call. That's you continue to see more green, right? So we're saying anything that's plus or minus 5% is normal. Anything below that is in the orange. Anything above that is in the green. So you went over 5% above asking. That's green. And that part of this chart has continued to grow month over month. Earlier in the year, it was the opposite. The orange was the bigger chunk, and now we reversed. So, yeah, homes going over asking, and then when you look at the average sales price versus the average list price, there's still a separation between those two. So, homes are selling on average higher than what they're listed for.
Yep.
And you can see the spread there. The other notable thing is that June of last year, the average sold price was about almost $16,000 less than this June.
Yeah, I saw that. I heard that in one of my podcasts recently too. We're at the new all-time high for home prices, median or average home prices, however you want to slice and dice it. Nationally, we're at our all-time high. I'm not surprised. That's kind of how the trend goes, right? I feel like our parents always talked about $17,000 houses. We'll never see that again, and it just gets bigger from here. So that's not surprising. And I kind of feel like we've talked about this before. I kind of feel like if you thought about making a move in the next 2 or 3 years, you should think about doing that quickly, because these are just going to keep going up.
Yeah, and that's definitely the way it seems, because we continue to not have enough supply, right? Mm-hmm. So one of the other key metrics to talk about whether we're in a buyer's market or a seller's market is the weeks of supply, and based on last month's sales and this month's current level of homes on the market, we've got 3 weeks of inventory, which is where we've been for the last few months now, right? So and I think that in a normal, like a balanced market, you're talking more like 6 months of supply. I mean, it's something crazy. We're very, very deep into a seller's market, and mainly because of a lack of supply.
Yeah, that's always the number one factor. I know rates are up and prices are up, but supply is down, and there's just not a lot of homes for sale, and people still move. So that's always going to be the number one economic driver, I think, of any industry. Right? Supply and demand is one of the fundamentals, not interest rate, not overall price. Supply and demand dictates the rest. So until that changes, we're still going to be in a seller's market. I don't think that's changing anytime soon. I think you've been seeing news all over the east side of Columbus. Microsoft just bought, Google just bought hundreds of acres. We're in this for a while, you know?
Yeah.
We'll
And
see.
Amazon put another $8 billion of investment into building over there and elsewhere around town. So yeah, you're right. It's continues to grow. So it was interesting. The price reductions were still lower than they have been in the recent couple quarters, but definitely bounced up off of where we were last month.
Yeah.
Not sure what exactly that means, but it's still, there's more that are going over than those that are being reduced. And I think probably what we've seen in the past, and you certainly firsthand with some clients, is the places that are fixed up and ready to go, they go and they go for over. The places where people have to put in some sweat equity to bring them up to standard, those are the ones that sit a bit longer and may require a reduction in price before they really move.
Yeah, a lot of sellers especially don't always take into account condition when they go to price their house out. That's actually part of our job, big part of our job as agents. And whether or not they take our advice, that varies case by case. So, if they're not factoring that in and they say the neighbor sold for this much, we should be able to at least get this much. Sometimes that turns out not to be true. So if they realize it quickly, that keeps days on the market lower, but people will overshoot sometimes. That's just reality. Okay, so this is continuing the trend. I do like to hear this from you because I know that you're tracking. We have a little heat map of our own tracking that excludes things from Dayton, excludes things from Cleveland. We have a lot of weird places on our MLS that really shouldn't be a part of our MLS. This is solely Central Ohio zip codes, and it does vary. We are varying a little bit. I don't know if you ever noticed the board's metrics, Columbus Board of Realtors metrics, are different than ours. And I got to think it's because of this reason, right? Because we're keeping it closer, running our own numbers.
Yeah, I would imagine directionally they're very much similar. Yeah, if you don't know exactly, I pull this by zip code. And really, it was very simple. Look at the outer belt and go a zip code or two outside of the outer belt, right?
Yeah.
You don't miss anything big and obvious. So we go out as far as, like Marysville, for example, because we want to be representative of what Central Ohio is, right? And that's the piece that may differ. We're not pulling everything from our MLS because, like you said, it goes all the way out to Dayton and some other places that maybe are not as representative of what's happening right here locally.
Right. It's a lot easier to just use board data, but I don't feel like it's as representative. I don't really know what happens in Toledo. I don't care. Toledo's not our market, and I don't know that it's reflective of our market either. I don't know that they're moving in lockstep. I'm saying this because I feel like I've seen on social media anyway, other agents making declarations based on board data. And I kind of wanted to get your take on it to say, well, we'll see about that. But one of the things I did see was all-time high again. I think their median average was different. I actually think it was lower. That's going to happen if you have Dayton houses and, Southern Ohio houses in the mix. But that's incredible, dude. That's incredible.
Yeah.
That we're just beating expectations in the craziest market ever. 7% interest rates, no supply at all. I mean, we just keep going up and I don't see any end in sight. I don't know how it would stop.
Yeah, and that's why we're excited to watch it every month and just see where it goes from here. So the trend has been very good of late. There's no reason to suspect, and I guess this is the part where we talk about if you're thinking about selling, what does this mean to you?
Mm-hmm.
If you're thinking about selling, this means things are great, right? You couldn't have a better time to sell your house. Are there things that you may want to do to clean the place up? Maybe some targeted investments in terms of upgrades. Maybe it seems like buyers are willing to pay for that, right? If things are finished and upgraded. But it's also one of those things where you don't always get your return on investment. So, happy to talk that through with folks. And then, as far as sellers are concerned, as far as buyers are concerned, what are your thoughts there?
Well, I think the earlier you can get in, the better off you are, obviously, if this trend continues, and we all expect it to, because of simple supply and demand. It's just going to get more expensive. We don't expect the rates to go down anytime soon. That actually takes a pretty big world event to have happen. And the last time we dropped rates like crazy was the crash, the housing crash, 2008. Started a downward trend on rates there just to stimulate the economy. And what happened, I think it was a political thing, was that nobody wanted to raise them back up. We were out of our of our economic stimulus area, and nobody wanted to be the president who raised the rates again. Does that make sense?
Mhm.
So we ended up with a generation, as effectively, all the millennials never saw these rates before. Now we have a generation of people, anyone in their 30s, grew up in their 20s and 30s with 3 and 4% interest rates. So this is a different world. This is the one I grew up in, and you did too, obviously, since you're so much wiser than me. But if you're contemplating it in the next couple of years, do it now. You'll be kicking yourself later, because the same houses are just going to keep going up, until something catastrophic happens. So hopefully that doesn't happen at all. We'll see. Yeah, but it's encouraging. So good news all around, kind of what we expected. I will say, so anecdotally, from just people that I've been talking to, I would not be surprised if these slowed down a little bit next month. So let's see what happens. As always, thank you for pulling numbers, Danny.